What's up, traders? It's Robert Falco here from Real Life Trading. We've been getting quite a few questions about margin and specifically with interactive brokers. So I thought I'd make a quick video around margin and trying to explain some of the sections. And if you click under account here, there's a lot of numbers that can get confusing. Which ones are probably important and which ones are probably not as important as we go through. First, I primarily use Thinkorswim. That's my main trading platform. I do have an interactive brokers account. I use it in case TOS goes down, which has been happening more and more often this year. Cross my fingers that that stops happening relatively soon, or to short some things that there just are not borrows available for on TOS. So I'll do my best to explain what each of these things are on IB, but it is a secondary platform for me. So let's go ahead and jump on in. I actually input a couple swing trades so that hopefully I would get filled on one so I could be able to show you some margin numbers. Otherwise, it's just an all cash account. And since I only use it for day trading from time to time, and then there wouldn't be much to show you and or explain. So I did get filled on Wix today. So this is the swing trade that I entered on Wix. So big bullish candle breaking out of this range, nice volume, and yeah, just buy in the middle of that big bullish candle with all that volume. So it came down and it did fill me. So let's go ahead and head over to IB and take a look. First, you can see net liquidity, 30,200. Again, these are rounded up. So if we click on this account button here, it'll pop up this balance margin requirements available for trading. You can see net liquidation value. If I sold everything in the account, which is only 25 shares of Wix at the moment, for that particular swing trade, it would be $30,234 USD. So it doesn't have cents on here, so it would round up. Equity with loan value, again, that's just your total amount. Reg T, anything that you see with Reg T, this is the regulation with the Securities and Exchange Commission that, and or FINRA, I think it might be, but that basically governs how brokers use margin and margin requirements. So that's what Reg T refers to. So Reg T, equity with loan, 30,234. This is a previous day, 30,200. Again, if you're on margin, some of these numbers might be a little bit different. This is mainly, it is a margin account, but I'm obviously not on margin as I only have one position open at the moment. So Reg T margin, you basically just take the 25 shares that I have right now of Wix, multiplied by whatever it's trading at. So right now it's trading at 261.79 right here. So a little bit of a bid-ask spread on it. That will get you this total. So securities gross position 6,546. If you divide that by 2, because your Reg T margin is 50% on stocks generally. So 3,272 is my amount of Reg T margin that I'm using to hold this position. So current initial margin. So this is the initial margin requirement. This is in the base currency. So this might be a little bit different if you're in Canada or Australia. Post expiry margin at open predicted. So let's just click this little question mark here. Again, if you ever have any questions about this, it's pretty cool that IB has these buttons you can click and you can come down here. So this provides a projected at expiration margin value based on soon to expire options contracts in your portfolio. So I don't have any options contracts soon to expire. I don't know how many days in particular that IB considers quote unquote soon to expire. I'm guessing that it's within the particular week. I know that with TOS, I usually get emails and messages within that week, like, hey, you have options expiring this coming Friday, yada, 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 if you want to do anything. So this is projected. As always, with options, especially if you're selling options, I personally am pretty conservative, so I make sure that I don't sell options that I can't afford to own and am willing to hold the amount of shares. So if you do have options that are going to be set to expire, that's going to show up there. This is the current maintenance margin. So let's say I take more and more positions, and or these positions like Wix right now is bouncing a little bit. But let's say this position keeps going against me, and I have a stop and such in here. But as this position goes against me, this maintenance margin is going to go higher and higher. And it will go to the max as far as I would have to have, the total amount in it. If it keeps going lower and lower, the maintenance margin is going to go up and up. So same thing, like if you're buying more positions, if you are selling more options, that kind of thing. Option sales, especially put sales, there's multiple ways that they calculate how much margin is required. And as the put sale were to go against you, this amount is going to go up and up. So these are projected numbers, but I think it's always a good idea to know if I sell a $50 put sale on something, that's going to be $5,000 worth of buying power. Total stock, right? $50 times 100, $5,000. Now, if you hold it on margin and you get put those shares, it's $2,500 worth of margin. But basically that's, the max that it could go to is the full cash secured, 5,000 if that position continues to go against you. Again, let's go back to our little thing here. So IB does provide you with margin warnings. To help you stay on top of your margin, we provide pop-up messages and color-coded account information to notify you if you're approaching a serious margin deficiency. TWS, which is the trader workstation, will highlight the row values that are in a distressed state. The colors of your account screen tell you the following. So if we go back here, if there's areas that I need to be concerned about, whether it's my Reg T margin or my projected maintenance margin or something like that, like if I'm about to get put shares, let's say like this projected look ahead maintenance margin could be a lot higher. And so yellow means you only have a 5% cushion above the margin requirement. If your account equity moves rapidly from a greater than 5% cushion to margin violation, your positions may be liquidated without you receiving a yellow warning. So again, one of the popular myths is that the broker has to tell you before they liquidate your position, before they force close other positions. If you are on margin, they do not have to tell you. They try to, but especially if the market's moving against you very quickly, they can just liquidate positions. If you are in short, they can force you to buy. It's called being bought in. So they force you to cover, like if shorts run out, that kind of thing. Orange, your margin position cushion is depleted and you have a short time to enter into margin reducing trades before your positions are liquidated. That could mean selling shares. If you're long shares and it's moving against you, it could mean buying a put, because if you buy a put, that can cap your downside risk and bring you back to within margin requirements. At this point, you will not be able to enter into trades that might increase your margin. Red, your positions will shortly start to be liquidated as necessary to bring your account back within margin limits. So you always want to be very, very cognizant of your margin limits and make sure that your maintenance margin and your Reg T margin is not exceeding your buying power. This is 4-to-1 buying power right here, obviously, because I have over 25,000 and I have unlimited amount of day trades. So for day trade buying power, you get 4-to-1, so 113,000. But your overnight availability right here is showing 28,379. So that's basically this 30,225 minus my current initial, my maintenance margin, current maintenance margin. So if this overnight liquidity starts to go negative or get in the red or yellow, then they can liquidate positions, etc. So you always want to be cognizant of that and make sure that this maintenance margin, if you get to the point where the maintenance margin is exceeding the value of your account, you're going to get a margin call. They're going to say you can deposit more funds, or you can liquidate positions, or you have to do something to decrease your margin amounts. And if you don't by a certain amount of time, I think IB generally does it like 10 to 15 minutes before close. They will start to auto liquidate things. But Interactive Brokers is generally very good about letting people know when they're expanding margin requirements, like around the election. some of these projected amounts could be like around the election, they were increasing margin to where rather than like 50% here, so 50% of this total position, it was up towards like 60 or 65 percent because they had predicted some increased volatility maybe. So they want to protect themselves to make sure that you don't lose their money. The broker is always cool with you losing your money. They're not okay with you losing their money, so they're going to do everything that they can to protect themselves from that. So let's go back over here. So we talked about that, and then this table obviously will tell you what all of those different sections mean. So that's always really cool to be able to just click that and look at it. Again, available for trading. If you click that, it'll take you to your current available funds, your excess liquidity, again, equity value with loan. This is your maintenance margin, minus your maintenance margin, sorry. So that's your, this is where you want to make sure that your excess liquidity does not become, negative, because that means your maintenance margin is going up and up and up. I think I can hover over this. Yeah, you can hover over that as well. So they actually do a pretty good job with little things that you can hover over or click on in order to tell you all the different things there. The look ahead stuff, again, these are all estimates. So you don't want to rely on that. I think they even had that little warning in here. Like if I hovered over this, even excess liquidity represents the total of excess liquidity in each segment, securities and commodities segment in your universal account. Since I have futures enabled on here, for example, you may have a positive excess margin in your commodities segment and negative margin in your security segment, or vice versa. So I would have to, mine's set to automatically sweep the money back and forth if I'm in a futures position or anything, which sometimes I do use IB to trade futures, so that's why that is there. But I think that's pretty much it. So the main things you want to pay attention to are obviously your net liquidity, your maintenance margin, your excess liquidity, and if you do have options that are expiring relatively soon, then you want to pay attention to this predicted level. But again, you want to make sure that you are not selling more options contracts than you can afford to purchase and are willing to purchase the amount of shares, because as they move against you, that margin can expand exponentially. So as always, if this video helped you out, definitely like the video, subscribe to our YouTube channel, or come check us out at reallifetrading.com, and you can comment question below. We'll monitor those and go from there. If you have any more complex questions or anything like that, you can always put those below. We'll try to do our best to answer them or make another video. But those are the basics of what to look at on margin in Interactive Brokers. Thanks so much, everybody. Have a great day.